Crypto channel. Don't forget to like and subscribe to the channel.
And we had tech stocks take a beating. And we talking about big tech take a beating. And we know as the Fed is raising rates, we know tech is going to take the biggest hit because a lot of them, guys, remember, was going 100 times earnings. And now that the Fed is shrinking liquidity, they're feeling the pain. And we have Powell again is facing political pressure as worries mount over the economy. But guys, we know what they have to do. They have to destroy this legacy market in order for the fourth industrial revolution to rise. They printed 20% of all money in existence in 1 year. And the reason for that was to bring in automation. And speaking of the fourth industrial revolution and the metaverse, we have Meta shares plummet on weak fourth quarter forecast and earnings miss. Now we know Zuckerberg is putting $100 billion in the metaverse. And the reason for that, because you're going to be working in the metaverse. You're going to be shopping in the metaverse. You have social credit. Facebook, Instagram, Twitter, they're the perfect platforms for it. And Meta has the updated Oculus headset commercial and is not talking about games. It's talking about you working in the metaverse. And you know, my main channel, Crypto Teacher, I get into more detail about that. But we had Mobileye go public today. Remember, guys, the Intel company is Israeli based. And we have Jim Cramer says to wait before buying the stock. And do I agree? I'm not your financial advice, not financial advice. Please do your own research. But yes, I do agree because I know stocks still have a ways down. We know we're going to have a rate hike next month and then another one in December. And then we have the Fed doing QT. And remember, they were supposed to do QT this year. They haven't done much. So we know they're going to start turning it up in 2023. And not only that, the other major central banks are going to be raising rates and doing QT also. So the global market is taking a hit, not just in the United States. Just the fact is, the United States dollar is the only thing that's holding us up right now. Now we have Elon Musk deal for Twitter supposed to close on Friday. Of course, Elon Musk always has to pull out something crazy, brings in a sink inside the Twitter office. And like I stated, Twitter is one of those perfect platforms for the fourth industrial revolution. So if the deal closes on Friday, I see a slight pump, but it will pull back like the rest of the stocks. We know Twitter is all about ad revenue, and we know that's going to start getting cut. Now we have Ford reveals a third quarter net loss. And again, guys, Ford is set up for the fourth industrial revolution. We know the electric vehicles. We know all about the clean energy push. Right now, we have Russia and Ukraine, and we know eventually it's going to be China versus the U.S. So right now, we definitely hear the drums are beating. So we're going to go over the stocks that are going to benefit. And we have Lockheed Martin. We have Northrop Grumman, General Dynamics Corporation, Raytheon Technologies, and Textron Inc. And we see majority of these stocks creeping back up to the highs. They will pull back slightly, but as we get closer, as things rev up, and we can clearly start to see it, we have Biden pulling back chip manufacturing from China and then building our own factories here in America. So manufacturing the chips in the U.S., and then plus, guys, we have the situation with Taiwan. So conflict is definitely brewing. But we know these corporations play both sides. Also, the banks. But getting over into the actual indicators, we had yields down. We had the dollar down, which is getting a lot of relief. And then also we had the VIX down, and the market was flat. And guys, we know GDP numbers are coming out tomorrow. And we're going to see how they played us. Are they going to say that we are officially in a recession? We will find out tomorrow. But guys, that's all I have for you. Have a wonderful day.
About it, we talk about inflation all the time, but it doesn't really impact our lives that much, and the people on the show that much. But it impacts the average family in our country. So out of 70% of our countries would fall into a middle America type of designation. And you know, at the end of the month, they have trouble. That typical family, and a lot of those are people that I know and their friends, they don't have enough discretionary income to pass that around. That tells me they're already in a recession, regardless of whether or not you have the economic data associated with that.
I mean, because real wages have dropped, too.
Yeah.
It's harder to put those things together. Watching the earnings season, look, right now we're worried about what we're hearing from some of these tech giants in particular, and that's affecting the NASDAQ today. If you have slower growth, that is obviously going to put a hurt on those companies primarily. What do you think of earnings season with the tech companies and then earnings overall?
I think there were a couple of things. First, as far as the tech companies goes, with Google and Microsoft, everybody's well aware by now that if you don't come in where you're supposed to come in on the top line, and if you don't come in where you're supposed to come in on the bottom line, you're going to get punished for that. But I think the biggest punishment is the insight that you give people going forward on your earnings call. So if you can't say we've turned the corner and we're going to be okay, then I think the typical investor, you're telling that investor that the trend is going to continue to be negative for you. And I think the market is going to really punish you as far as that goes. As far as overall earnings go, I think for the most part, I thought earnings were coming in reasonably well for a lot of the smaller companies. There were about, I thought 20%, I could be off on that number, actually had beat what the forecast is. But almost every one of those had lowered their forecast. Mm-hmm. So multiples are coming down with regard to that as well. So earnings up until now haven't looked bad, but that's on a much lower forecast. And the bigger companies that are coming in now that are getting hit are getting smacked down by the marketplace.
And our next guest says investors should look to energy to protect their portfolios. Bring in Jerry Castellini, Chief Investment Officer of Castle Ark Management. Jerry, I may know something about energy, and we talk about oil and gas all the time, but here's the problem. There's a whole section of the world that says we're not going to invest in oil and gas, the ESG movement, et cetera. And you can agree with that, by the way. But if you do, you might be leaving a lot of money on the table because there's only one group that appears to be consistently growing its cash flow, and that is energy.
Yeah. Brian, you hit the nail on the head. I mean, first of all we're doing right now is reviewing these big tech company earnings and tearing them apart and trying to piece out what could happen over the next couple of years. And we're going pretty far down that road, right? We've knocked these things down a lot. A lot of investors are just worrying, is there one more shoe to drop? I could argue either side on that. I personally think we've kind of washed out most of them. But what's also missed, and the two biggest earnings estimate or the biggest earnings announcement this week are going to be two companies that you'll get very little coverage from, Exxon and Chevron on Friday. You talk about things that matter. You just nailed it. Exxon is the global dominant oil and gas player. They have operations all over the world. They are going to report one of their best numbers ever. And investors are going to hate the fact that one of the biggest companies is doing this well, leading the market, breaking out to an all-time high, as a matter of fact, in the last 6 or 7 sessions. That is a warning for folks that want to cling to old views of the industry and avoid owning them.
All right. Not only are you